Hello everyone, welcome back to another video on the Young Girl channel. And I'd love to wish everyone a happy new year 2026. Hopefully, we all achieve the goals we've set for the new year and let's make some money. So, in this video, I'm going to be explaining some of the anticipations I have coming into the second week of Jan 2026 on some of the pairs I trade, that is GBPUSD and the indices, that is US30 or the Dow, and then US100, or also known as the Nasdaq. And then we shall go through the correlation between these different pairs. Like, for example, for the GBPUSD, I use DXY and EURUSD for correlation, whereas for the US30 and Nasdaq or US100, I use all the three US stock indices. That is US30, US100, and US500 for correlation because all the three indices are positively correlated. Yeah, so I'm going to begin with GBPUSD, and as you can see here on my chart, on the daily time frame. And first off, I'm going to give a disclaimer. We know all the things that are happening at the macro level or fundamentally. We know that we are expecting the dollar to be weak, but in this video, I'm going to be solely focusing on the technical analysis rather than the news or the fundamentals that are happening. We also know that fundamentally, we know they have been cutting the interest rates. Trump wants Powell to cut the interest rates, whereas he's the Fed chair. Powell, for those who may not know, Powell is the Fed chair for the US Central Bank, whatever it is called. So he's the one who announces when they cut the interest rates or the decisions, the Fed policies they make during their meetings. So there are very many things that are happening at the macro level fundamentally, but I'm not going to get into that. I'm only going to focus on the technical analysis. Yeah, so for GBPUSD on the daily, you can see that currently, let me first remove this. So if we are to look back, like remember these candlesticks are forming on the daily. So if I'm to look back like 60, if we're to consider the 60, 40, 20 IPTA data ranges for ICT, I'm going to be looking within this range from this swing low here. That's why I've stopped here. This is an intermediate swing low, and then this is an intermediate swing high, but I'm looking from here, from today's candlestick. So these are 47 bars, meaning those are 47 days. Yeah, so I'm going to look back within this range. This is the range I'm going to be using for all the PDRAs I'm going to be considering for my whatever, how is it called? For my anticipations, yeah, coming to the into the coming weeks and all that. So we have from here this intermediate swing low to this intermediate swing high right here. You can see that currently this is the equilibrium, this 0.5 level here. This is the 50, also the 50%. So above the equilibrium or the 50% is premium, and then below that is the discount. So obviously we know that in premium zones we would be looking for selling opportunities or shorting, whereas in discount areas we are looking to buy. So right here, right now I'm looking for selling opportunities or shorts on GBPUSD, and these red levels you see on my fib. These are the OTE zones or the optimal trade entry zones according to the ICG concept. And yeah, so anticipating if we're to look at the correlation between GBPUSD and the DXY, these two are negatively correlated. So if we're to look at the DXY, um, a negative correlation, I mean that if GBPUSD is moving up, the DXY is moving down. So that's what negative correlation means for those who may not know what it means. Yeah, so basically, we can see that also on let me maximize this chart for the DXY. We can see that also in DXY, if we are to use let me first remove this, and then if we are to look at the dealing range from for the past 47 days from today, we can see this is the highest high we have here, making it an intermediate swing high. And then this is an intermediate swing low here. This is the lowest low we have within that range of this shift from here to this side. Let's say the 60 look back, 60-day look back from today. Let's see if, sorry, from here to this side. So 60 days from there, right there. So we can see that this is the highest high we have, and this is the lowest low we have within that range. So right now, also the same thing is happening on DXY. Right here we have the equilibrium, and we are below the equilibrium, meaning we are in a discount zone. Yeah. So in discount, obviously we'd be looking to long or to buy. That's why you're seeing my arrows here. I'm anticipating for buying opportunities on the DXY. And my target on the DXY for these relatively equal highs, abbreviated as REH. Yeah. So going back to, if we're to also look at Euro USD, I don't trade Euro USD. I just use it for correlation. But if we are to look at it right here, it is positively correlated with GBPUSD. You can see they have been moving up here and then here. We made a market structure shift lower here at this point here. This point here. Why this thing is not okay. Yeah, so this point here, we made the market structure shift when this short term low was broken within this move lower. Same thing happened here. That's why you're seeing this level here, this red level here. It's one, I abbreviated it as 1D minus BB. This is okay. First of all, this is a breakup block. Right here, these two consecutive down close candlestick, this one and this one, these formulate bearish, an ICT bearish breakup block. So if we respect this, I would love to see price continue going down. And also we have this PDRA, this fair value gap, or the bearish fair value gap, also known as a CB, or sell side imbalance by side inefficiency, abbreviated as 1D CB. Yeah, so this is what I would love to see in price. I would love to see it respect if today's candles daily candle closure, preferably the body closes below the 50%, this dotted line you can see here, that's the consequent encroachment, or the 50% of a fair value gap. If the body closes below it, then there is a very high chance that price is going to be bearish this week. So I would be anticipating, I would be wanting to get sell setups on GBPUSD. But if we close and disrespect this fair value gap, then I would wait to see how price is going to be acting. That would change my bias, my bearish bias. And I would be expecting maybe for us to go up, to continue going up Remember, the dollar is like weak. Fundamentally, we all know the things that have been happening on the macro level. So anything is possible, anything can happen. Also, it would, consolidate since it's Jan. And yeah, so for that would be it. This is what I would love to say. I would love to see price, react off of this fair value gap and then drop up to like this I would love to see it drop up to this side down because the equivalent of these are relatively equal highs on the DXY as we can see here. These relatively equal highs on the DXY, abbreviated as REH here. These are these points here. So that would make these since this low is slightly higher than this low here, this would make these relatively equal lows on GBPUSD. Right? So let's see, that's RE, sorry, REL on GBPUSD. So I would be anticipating, or that would be my, long-term target. Or if we can just reach the equilibrium of this, this billing range from this low here to this high, that is my target for this week. Only if we respect this fair value gap today. Yeah, so for US 100, let me move these. And I add on NASDAQ, Japan. I also add on US 500 Japan. Yeah, so for sorry, this is supposed to be restart. Yeah, so we can see that if we are to look at the long term, perspective of all these three indices, this is US30 or the Dow. The Dow is up, then US100 is in the middle, or the Nasdaq, and then US500, also known as the S&P 500, is this one down here. So we can see that all the three indices are positively correlated in a way that if US30 is going up, then also US100 is going up, then also US500 is going up, and then if they are going down, you see they are all moving down. So that's what I mean by positive correlation. Yeah, so what we have on the daily so far, for we can see that we have been making all-time highs on the US30, though for the futures, which is okay, let me not get into that, but it would be better to like consider the futures contracts because for them they are cleaner since it's only one exchange that offers the bid and ask prices for all these stock in indexes or indices. Yeah, so we can see that here on US30, I've been making all-time highs on the daily. We are strongly bullish. And yeah, we have been breaking, respecting all the bullish PDRAs. As you can see here, we had this fair value gap here and price, at this point here, it came, respected it, and continued going higher. Then we also had these consecutive 1, 2, 3, 4, these 4 consecutive down close candlesticks, which form an order block or a bullish order block here, right here. I like using the bodies, but let me just use week to week. From here to here, we can see we had, you know, plus that means bullish order block. Then this is a BC. Sorry, is it a B? Yeah, buy side imbalance, sell side inefficiency, or a bullish fair value gap. Yeah, so we can see price stopped there and then it continued going up. Those are bullish PDRs. And if we are to look at the data range, the 60, 40, 20 data, you know, from today's candlestick, this is the 60 bars. So we can see that this is the lowest low we have within this range here. This is the lowest low and then this is the highest high. So if we are to use it to mark our dealing range from here to here, let's see. Yeah, from here to here, we can see that we are in a premium. But since this is kind of different because now these are indices. These indices or the stock market or these US stock, whatever, they keep on making all-time highs, and it would be very risky for someone to be looking for sell opportunities when price is making all-time highs. That's why here, much as it's in premium, it would be like risky to be looking for short positions. So that's why I haven't, been trading these indices for like quite some time. Because my motto is that if I see if it's in premium, then we will be selling such things. Yeah, so